Okay, so today I want to look at, 1 minute. Yeah. Today I want to look at candlestick patterns. What are these things and what does that mean? And how can that be helpful to us? Candlestick patterns, okay? All right, those of you who have doubts to ask, please write it down. And then after this, I will, would love to have a conversation about this, okay? Candlestick patterns. All right, see, every candle, it tells us a story. It tells us the history of what happened. It really tells us the story of the market, the story of the price movements. And also remember that every time the price moves, it is actually an interaction between buyers and sellers, okay? For every sale, there is a buyer and a seller. Two are involved, okay? So there's a psychological element involved in the buying and selling process, and all of that, a part of that can be seen through looking at the candles, okay? So the candlestick patterns tell us four things. Number one, it tells us what the opening price is, okay? So for example, here is the open price for a green candle. So, okay, four things. First, the open price, the close, the high of the day, and the low of the day, okay? So for example, this green candle, this is where the stock price opened in the morning, and this is where it closed in the evening. But during the day, it had gone up to this particular range, all the way up here, and then it went down all the way to this low range. You see this range thing here. Okay, so that is a bullish candle. The bullish candle, okay, not simply that it is green, the bullish candle, that day, the price closed higher than the opening price. When I say day, well, whatever the time frame is, okay? Whatever the time frame is. For example, if we're using the daily candle, that means the opening of the day, okay? The close of the day was higher than the open price of the day. That's what it means. But if it's a 1 hour candle, okay, the beginning of that hour, okay, it opened at this price, but at the close of that hour, it closed at this price. Now, for swing trading, short-term trading, we're using more of the daily chart, and you can even use the weekly chart to give you a broader picture. And then the bearish candle often shows up in red. And then again, you have the high and the low, the open and the close. See, the open and close is the opposite for the bearish candle, the red candle. Why? Because the close of the day was lower than the opening price, okay? That day, 9:15, when the markets opened, or whatever time reference you're in, maybe you're dealing with the US markets or some other, whatever time it is, when it opened, it was at this price, but when it closed, it was at this price. And sometime during the day, it went through this entire range of that low and this high. So that is the bullish and the bearish candle. So the candles show us an entire picture and the story of what went on. Okay, next. Now we'll look at something that we call Doji. Okay, you don't see this very often, but sometimes you do see it, and it also tells us a story. First one is a neutral Doji, or often it is simply called Doji. Okay, what it is the candle almost has no body, okay, just the wick. All right, what does that mean? Well, that means that the opening price and the closing price were the same. Okay, it doesn't happen very often, but it does happen where it opened at this price, and then during the day, it went up to this range, went down to this particular level, and then at the end of the day, it closed at the same price, okay? Now, this Doji is actually, it's really neutral. That means This is actually an indecision candle. This is the word I like for this. It's really an indecision candle. The chances of the price going up or down are about equal. It's hard to tell where. Okay, the probability, as I said earlier, it's a game of probabilities and not really a game of chance, nor is it a game of luck. It is a game of probability. Okay, but with this regular doji, it's hard to tell where it's going to go. It's fairly neutral. It's indecision. So it can go up or it can go down. Now, this one, long-legged doji. Okay, same story here, but a little bit different. The range is a bit wider. Okay, the range is a bit wider. All right, so the opening and the closing was also at the same level, but the only difference is a longer, higher range. All right, what does this show? It is also indecision, but the prices can fluctuate widely. Next one is called the gravestone doji. Okay, so the opening and closing are right here. All right, so it opened at this price and then it went up, up, and up, and it tried to go up to this high level, but then there was a strong rejection of the high prices and it closed at the lower level. Okay, so the price was trying to go higher, it was pushing higher, but it was powerfully rejected. Okay, and closed at the lowest point of the range. The chances are greater, the probability is more for the price to go lower from the next candle onwards, whether it's the next day or the next hour or whatever it is. The chances are higher that the probability is higher that the prices are going to go lower. Okay, or the trend. So this is basically would be a trend reversal. Okay, this will show a trend reversal. So if it was on an uptrend, you see something like this, there's a high probability that the trend is going to reverse. The dragonfly doji, see this? So the opening and the closing of the day or the hour was right here, same point. Then the price went down much further, all the way down to this range. And then at the close of the day, it closed high. Okay, so what does this show? This shows there was an attempt, okay, for the price to go that low to that low, but the lower price was rejected and actually forcefully rejected. You can use that word. It was rejected and closed at the highest point. So here, the chances are higher. The probability is much higher that there's going to be a reversal to a higher price at this point. Okay, and then this is very rare, even more rare than the others. It's called a four-price doji. Okay, why is it called a four-price doji? Okay, remember we said that four things we learned from the candlesticks. There's an opening price, closing price, the high price of the day, and the low price of the day. All four prices are right here at the same level. Okay, this is very rare, but I have seen it, and it is very rare. Okay, so I'm going to stop this video for just a minute, now the screen share for just a minute. So remember I said that the stocks will go up, for a few days, and then it will just consolidate between a particular price point or two particular price points. Not exactly, but it is a range. It is like an approximate range. So it may do this and then it may go up like this, all right? So looking at these dojis, when you find a doji, these are some clues for reversals, okay? So these are sometimes called trend reversals. All right, let's go back to this now, to the candlesticks. All right, next one is called engulfing patterns. Engulfing patterns, bullish engulfing pattern and bearish engulfing pattern. Let's talk about that. Okay, so here the prices were going down, down, and down. Okay, the candles were gradually going down, and then you'll see this large red candle or strong full red candle with only a little wick at the top and bottom. Okay, then you see a larger candle that engulfs this previous red candle. So you see a larger green candle that engulfs, or it kind of overpowers, it kind of outshines, or much bigger, okay? And it just comes out much stronger. And so that shows a very strong move in that direction. So this one right here, this red one, so the price had opened here at this top level and it closed at this bottom level. But here, the price opened here and closed here. Now, whenever you find the body bigger, whenever you find a bigger body, that shows that it is a very strong move, okay? Whenever you have a wider body, it shows a very strong move. Like even if it's red, okay, it'll show a strong move. But then we have a green one, which is a bullish one. You see a strong move. And so when you see this pattern of a smaller red candle and an engulfing green candle, the probability is higher that the price is going to continue going up and up. Now, can the price go down? Yes, it can. Okay, it's not 100%, and nothing is 100%, but it can go down lower, but the chances are higher. All right, and the bearish engulfing. Okay, so here is a story where the price has been going up higher and higher, and then all of a sudden you see this one candle being engulfed, this green candle being engulfed by a larger red candle. So the opening of the red candle was here, closing was here, which shows a strong trend reversal toward the downside. Okay, so what's happening here, when you see this kind of a pattern where you have a full green candle being engulfed by a much larger red candle, that shows a bearish engulfing pattern. Here's another example of the same thing. So you have a smaller candle that is green being engulfed by a larger red candle, okay, which is a price rejection. So it the price tried to go all the way up here, and it rejected all that price, and it went all the way down. It tried to go here, but it didn't go that much, but it went here. So whenever you have a larger red candle following another green candle like this, it is often a bearish engulfing candle. And then here you have a bullish engulfing. So the same pattern here, but the opposite. Okay, so again, the probability is higher. That's the engulfing patterns. Okay. Next one, it's called a hammer and a shooting star. This also you will see. You'll see not very common, but you will see it there. Okay. So this picture actually somewhat looks like a hammer, I suppose. Okay. So this is a strong rejection of lower prices. So what's the story here? The story here is that the day opened here at this level, and sometime during the day, the price went all the way down and up, and we don't know how many times it had gone up and down, but then at the close of the day, it closed even higher. Okay, so it is a strong rejection of the lower prices. The difference here is that this is a smaller body, okay? And it tried to go here, so it's a strong rejection of the lower prices. And then the shooting star is the opposite of this, where the day opened at this level, and then during the day, it went down here, went all the way up, and then closed here. So although the attempt for the market to drive the prices up didn't work, the price was rejected, and you see that the prices were going down. And so this shows that the probability is higher that the price will go lower the next day or from the next candle onwards. So the hammer, okay, whenever you see a hammer, know that the probability is higher for the price to continue going up. When you see a shooting star, the probability is higher that the price will continue going further down. Okay. All right. The last one we'll talk about is the tweezer bottom and the tweezer top. Okay. These are nice because these also show something similar. This is a very bullish, strong reversal pattern. Okay, so here's a red candle followed by a green candle. Okay, almost similar to the engulfing pattern, except that the second candle doesn't really engulf. Okay, it just is like equal to the previous one. It's equal to the previous one. This also has a good possibility or probability of the price going higher for a tweezer bottom. Why? Because although it tried to go up here, it didn't do it. It closed lower, but then at this point, okay, it closes here with possibility of even going higher, but there was not enough buyers there. So here also, you have a better probability of the price going up. The tweezer top, okay, is the opposite of that. It is bearish, okay? So you have a large green candle followed by a large red candle, almost equivalent in size, not really engulfing, but that also shows a bearish rejection of higher prices, and you end up with a higher probability of it going down. Okay, so we have several different patterns here, 1, 2, 3, 4 different patterns, and then we'll just review very quickly, and then we'll continue. So we saw the interpretation of the candle, 4 price points: the open, the close, the low, and the high. Okay, so the green means that the close was higher than the open. The red candle means that the close was lower than the opening price. All right, then you have the dojis. All right, here you have a regular doji, which is an indecision candle. This is also an indecision candle. It is both of these. It is hard to determine which direction the market will go. Probably there's an equal chance that it could go up or higher, or up or lower. Sorry. And then you have the gravestone doji, okay, where there's a price had tried to go up, but there was a strong reversal of the higher prices and closed lower. Okay, so the probability is higher that the price will continue to go lower from the next candle onwards. The dragonfly is the opposite, where the price went all the way down and then closed higher. Okay, but it opened here. It opened here, and then it went all the way down. It tried to go there, but then it closed here. At this point, the probability is higher that the price will continue to go up. And then the 4 price doji simply means that the word 4 price simply means that all 4 are at the same point. I have seen this, but it's not that common. Opening, closing, the high price, low price, all at that same level. It's quite rare, but it does happen. Okay, and there also it's quite neutral, and it's hard to know which way it's going to go. And then the next 2, the bullish engulfing and the bearish engulfing. Okay, saying the same thing. You have one candle being engulfed by the next one. Okay, so if a red candle being engulfed by a much larger green candle, then the probability is higher for the prices to continue moving up. And the opposite of that, you have a green candle engulfed by a larger red candle, the probability is higher for the prices to go down. Okay, next we have the hammer and the shooting star. So again, the hammer, the price is opened here, and then during the day, it went through this entire range, then closed higher. So although it tried to go this low, but there was a rejection of the price and it closed higher. And the next day, you can expect a higher probability of higher prices. Here, the opposite. It opened here, okay, and closed here. But during the day, it went through this entire range here and closed lower. And the next day, you can expect a higher probability of the price going lower, okay? All right, and then we have one more, the tweezer bottom and the tweezer top. All right, similar to the engulfing patterns, although it doesn't engulf, okay? It just is somewhat equal to these 2 candles. Even there, okay, even there, it seems like, it's like a fight between the 2. It's like a fight between the 2, and both becomes almost the same size, but the probability is higher that the prices will continue moving higher here. And then again, the opposite here. Okay. All right. Shared a lot of things in one short video, but we'll have the video up for you to be able to watch this later on. Okay. So we have a few more people that joined us. Savida, good to see you. And Ajish, I think we already greeted Jacob. Okay. So I want to give you a chance to just ask questions, maybe, share some thoughts about that. Have you seen such patterns and have you observed these? And remember, when you're in a range, especially when you are in a range or when the stock is consolidating, that is a good time to look for these kind of patterns. These are where you can kind of see where the trend could reverse. Okay, so when you see a trend reversal somewhere here and it begins to move beyond the support and resistance. So if this is the resistance on the top, the bottom is the support, and when it goes here and continues up, then you have a higher probability that the price will continue moving further. Although, remember, there could be kind of a temporary reversal. So very often you'll see this, it'll cross this level of resistance, and then it will retrace, it will go back and then go up again. Very often, not always, but very often you'll see that, it's like it'll fake you out, okay? It'll go up and then come back. It's called a retrace, okay? It'll go back down and then go up again, okay? All right, so let me stay silent to give you an opportunity to ask questions, any comments you may have. Oh, let me just point out one more thing. This is a good point of entry. These candlestick patterns, you're seeing, some people, what they will do is they will keep these stocks in a watch list and keep a separate list of these that are continuing in a range. And then they will watch for these kind of patterns. And as soon as those patterns show up, then they look to see if it is going beyond this resistance. That's where they will buy. Or they will wait for a retrace, and then as it moves up, then they'll buy. Okay, so they can escape this few days or weeks of going sideways. They will catch that uptrend. Okay. Questions, doubts? All right, if there are no questions about the candlestick patterns, then you can ask that anytime. We have about 15, 20 minutes left. And I would like to maybe talk about other things that you may have doubts about, questions about. And by the way, next month, if it's possible, I'm thinking of doing one entire session focused on just new people that are brand new to the market. Okay, and what to do when you're just brand new. So if you have friends that that might be interested in trading, maybe we could make that one entire session just to help new people. That's what I'm thinking of. But I have another really good thing that I'd like to share with you. Let's see how we can divide up the time, but we can help the new people. That might be a good focus, might be a good time for you to invite new people. Okay. Let's take time for just general questions about your trading.
Thank you, Pastor Alexi. That's a very helpful session. In fact, this is the first time I have joined your session, so thank you. And thank you for the motivation to join this trading. In fact, I joined a few weeks back, but I haven't done any trading till now, because I was not kind of, focused on that. I had something else to do. But this is kind of a motivation today. So thank you so much. A lot of things new, but okay. Thank you.
Good. Yeah. Remember that persistence and consistency are really important. Okay, persistence and staying consistent will be very important for us. So we have a question by Ajish. Are there any templates for these candles that I can import to my Zerodha charts? No, it's not. This is not really a template. What you do is you open the chart, and as you open the chart, you look for these patterns to show up. Okay, and what you can do is you can kind of go back to the history of that particular stock. Okay, and you can look at the history, look back, and look for these kinds of patterns, and then see what happened after that pattern. Okay, see how that probability worked out. And often that's a really good way to learn, by going through the charts and retracing. And I know it's hard to find time for some people, and I sometimes struggle with that, but literally I take time somehow to go through the charts and look for patterns like this. And I'm looking for, all right, how many days is it moving up? Okay, and then how many days or even weeks is it going sideways or in a range? And then I look for what was the key, okay, right before it broke above that resistance. What was the key? What caused that? And I look for that also. Sometimes there's no explanation, but often you'll find these types of things there. So, but I can share with you, this video will be available so you can see that. Good. Another question, how can we put a trailing stop loss to any stock that is already in our portfolio on Zerodha? Is it possible if we don't put trailing stop loss while buying the stock? Yes, you can. So what you do is, okay, you go to your holdings, okay, you go to your holdings and then look and then click on the options. There you take the option that says create GTT, create GTT. Okay, at that point, it will give you the option of creating. The GTT is simply an order that you're placing, and the order is good till triggered. That's what the GTT is. Okay, it is good till triggered. So you can do that. And then you set what the minimum you want, the stop loss, and you want to put -2 or -5 or -10, and then what is the top point you want. So that means, see, when you do this, make sure that the ratio is 1:2. That means if the loss that you're willing to take is 2%, make sure the profit you're looking for is 4% or higher, double that or higher. So if you're willing to take a loss of 5%, then you should look for a profit of 10% or higher. Or what you can do is not put a target and keep trailing it. Okay, next one, Ajish, what are the steps to identify good stocks and add to a watch list? Actually, as I said earlier, for trading, we're only holding on to the stocks for a few days or a few weeks. So the analysis of the company doesn't matter as much. Okay, now you don't want to select penny stocks. You don't want to select stocks where there's hardly any trading. Like, if you see Jet Airways, you look at a stock, it's hardly being traded. You'll see just a few dots here and there. You don't want to get into that, because if you get into that, what could happen is you may not be able to sell, because there may not be any buyers at that point. Okay, you want to get into companies that are either large caps or mid caps. Small caps can also work, but large caps and mid caps. Cap means capitalization, meaning how much, how big they are, the companies that are, and the capital they have out there. Okay, so those are the stocks that you will trade a lot. So identifying a good stock to add to your watch list. All of these are good, but your your watch list needs to have, you need to narrow it down to the stocks that are trending. Okay, you need to narrow it down to the stocks that are trending. And we talked about moving averages. Okay, you can find the moving averages information there, and the videos are there. So first, you can find, you look for the moving averages. That will help you to narrow it down so you know the trend is up. The second thing, you find stocks that are breaking out of the range. Okay, find stocks that are breaking out of the range. That is another area, and that is another way to identify that. Okay, so once the stock breaks out of a range, that is a good place to enter, and then sometimes it'll break out and retrace back and then go up. Okay, actually not sometimes, quite often you see that. I don't know, maybe 50% or more. Okay. All right. So that's how you can have a watch list of maybe 20 or 30 stocks, but then you can narrow that watch list down to only the stocks that are trending up. And actually, on my desk in my office, I often have on a sheet of paper, I have maybe 5 or 6 or 7 stocks listed on the paper that I'm looking at very carefully because they look very attractive to me, because they're in the range or they're just breaking out of that range. I look for those and I write those down there so that when one of mine sells, I'm ready with this shorter list. Okay, then I don't have to look for 30 or 40 stocks. I have maybe 5 or 6 that looks really good to me. And I go through those 5 or 6 and see, are any of these ready to break out now? Okay. All right. What else? Do we have another question? Thanks to everyone. And thanks. Please admit me in the group. Okay. I will get your number later on. And maybe from Charlie, I can get your number and then I can send you the invite. Okay. I can send you the invite. All right. Good. Any other there's an invite link that you use, but before that you will need to download the Signal app. Okay, good. Any other questions?
Yeah, I would like to know.
Yes.
When to sell the stock, because when it's going in red candle, how long we have to hold on? Because majority of my losses is like the stock has gone to -18 and -15, and I'm still expecting that it might go back to the green candle. Sure. And in that way I'm losing so much of capital.
All right.
So when I need to realize that there is no way that it will come back to the green candle and I need to get out of it.
Okay, good. So first, I really want to recommend everyone, instead of looking at the red and green colors, I want to recommend everyone to open your charts, because the charts, they will tell you the story of what is happening. If you only look at the colors and the numbers, you'll say, oh my, I bought it at this and now it's at this rate and it's just going down. But what you bought might have been consolidating. It might have been in the process of consolidating, and it was up here, and it may be on its way down for a few days. And then you might be seeing that and saying, wait a minute, it's going down, down, and down. Okay. And then it will reverse back up, and then it will just continue doing this. Okay. So to answer your question, that's one thing. Second thing is this: when you enter, you have 2 choices. You can enter with a stop loss, okay, maybe 2% or 5% or whatever it is. And see, that's where you want to open the chart before you enter, because if it is in this range, okay, you can put the stop loss, you can see where this rate is. That might be 2% or maybe higher, and you can put the stop loss below that, okay, so that you allow it to be up and down in that range without hitting the stop loss. And then when it's ready to break out, it can go. That's one. That's the second thing. The third thing is this: instead of just buying when it is on the uptrend, look for stocks, make a list of stocks that are consolidating like this, okay, maybe 5 or 6 or whatever. Make a list and write it down somewhere. And then what you do is each day, it'll only take you 5 minutes. Open up all 5 of these charts, okay, and see where it is. And look for these chart patterns, the candlestick patterns, and see which one is ready to break out, okay, or which one has broken out, and buy it at that point. Then when the price continues to go up, okay, Now, will it always go up? Well, it could go up and then come straight down, but the probability is higher when you have these candlestick patterns. The probability is higher. Okay, so if it does go down, it will hit your stop loss and you take a loss and you just move on to the next stock. Okay, but if you want, you can not set a stop loss, but the only risk is this. We have one person in the group constantly says he doesn't set stop losses. Okay, that's fine. See, that's your choice because it's your money. But what happens is this, it'll go below maybe -5 or 10 or 15, and it will go down here and it will maybe consolidate for weeks, sometimes for months. It'll stay down there. And yes, it will eventually come up. But the question is, do you want to keep your capital tied up for weeks and months? That's a big question. Okay, so it is good to just completely watch carefully for that and see where the stock is. And it is better to buy the breakout when it breaks out. Now, once it breaks out and you see that it's moving higher, 5%, 6%, 7%, okay, there what you can do is you can put a stop loss, right? And you can trade it. You can put a stop loss at 2% or 3%, or if you want to hold the stock longer, if you're willing to hold on to it longer, you can put the stop loss at 5 or 6 or even up to 10%. That means you may wait, you may hold on to it for 1 or 2 or 3 months. Some people do that, and they hold on to it for several months, and they might end up getting 30 or 40% profit off of that. And then, so they keep that stop loss, and then they keep trailing it. Okay, they keep modifying that stop loss and going up higher. Good. What else? All right. Anyone else? Anyone else? Any other questions? And then we can close after that. Okay, those who are silent in the group, I would encourage you to jump in and just kind of comment on what others are doing, like helpful suggestions. And also, whenever you have questions or doubts, please ask those questions. Remember, there is no dumb question or bad question. The only bad question is the question that was never asked. Okay, that's the only bad question. If you have a question and you never ask it, that's a bad question. Okay, but if you ask it, all of a sudden it's a good question because you've asked it. All right, and I really feel that the ones who ask more questions, you'll definitely end up becoming profitable. All right, and also remember that in the group, okay, if you are going to give any kind of a link to an article, to a video or anything, please write a 1-paragraph summary about that. What is this about? Okay, even without watching that video, even without reading that article, we should be able to get a general idea of what it is about. Just write 1 paragraph about it and then include the link. Okay, please do not just give a link without anything at all. Give at least a small paragraph. That would be very helpful. Okay, anything else? Any final questions, thoughts? Okay, if you have any ideas, for our meetings like this, or if you have any ideas for the group or for the training, let me know, and I'd love to help you with that. And we have a few people that are interested in trading from outside the country, and then and their issues will be a little bit different, but then still I believe that all the concepts are the same. So it doesn't matter whichever markets you're trading. You could be trading in US markets or some other places, like Europe, wherever it is, it's all pretty much the same. Okay, because it's all a psychology behind the trading. All right, no further questions. Thank you so much, and I'm going to end the close the recording here. Yeah.